Hello and welcome to the first Acuity Insights video. I thought the first case study could be really interesting to a lot of people and a lot of Kiwis, which is Rocket Lab. According to sources or Claude, about 32,000 Kiwis own Rocket Lab. Rocket Lab is ran by a Kiwi founder and was originally founded to further space exploration and has made tremendous progress and in most cases considered second place winner behind SpaceX. Just to start off, as a disclaimer, this is just for educational and informational purposes only. None of this video is advice. We are just simply looking at the phenomena which is Rocket Lab and the shareholder base, which is heavily concentrated into what would be considered retail Kiwi investors. One of the greatest things and the hardest things to do as an investor, especially when you're dealing with reasonable sums of capital, is how do you let your winners run and what to do when you are holding on to an Nvidia that doubles and then it doubles again and it doubles again. Or of course, in this case, Rocket Lab, which was as low as $3 in 2022. So this is a case study on what happens when a 10% position turns into a 90+% position. And what questions are we asking ourselves? So just in the case of when I started making this presentation, the price was at $71.91. Now I think it's about $68 and change, still in a very similar range. The price gained from December 2022 to roughly now, which is about 1,800%, so about 18x the initial price. So with 32,000 Kiwis investing, you could assume the average entry price might be in the $12 range, and that's kind of a almost 5x return on the cumulative shareholder base. And then you also have the kind of range of assets or value that equates to in total is, it could be as much as $3.2 billion. And then this gets really interesting when we're looking at foreign investment tax that Kiwis have to pay that are investing overseas, especially in the case where the company is actually a New Zealand branded company, even though of course they have a lot of operations and they've utilized American markets to grow and raise capital. A lot of people consider Rocket Lab a Kiwi story. But what that means with them being listed in the US is that investors could actually be paying on unrealized gains up to $62 million a year in foreign investment tax. So this is a huge drag on returns, especially with such a volatile stock. You don't really have too strong confidence when you've got an extreme volatility situation in terms of the stock price. So this is a stock that in a number of years has gone from $3 something to, at its high, it was about $100 a share. This becomes a bit problematic when you have individuals, 32,000 Kiwis that are essentially paying a wealth tax here when they have not realized any gains, and this asset in particular doesn't even pay a dividend. How do you deal with that tax burden, especially if you have invested and you don't have tons of liquidity to deal with tax burdens? It's going to force a lot of people obviously to potentially have to sell their position in order, or portions of their position perhaps, to even pay for those responsibility. So it's definitely something interesting to raise, considering now this is a reasonable position in net Kiwi wealth. I got asked a question the other day around how does someone try and protect themselves if they have a very large position and they want to try and reduce the volatility of their portfolio. Couldn't really comment on that or give any sort of view, but I was interested myself. I was like, well, what's the implied volatility? What's Wall Street pricing when it comes to the stock move over the next 1 month, 3 months, and 1 year when it comes to Rocket Lab? Because that gives you a sense of what the smartest people on the planet are pricing the risk of a large price move in Rocket Lab to be. So the implied volatility has not changed too much. So we're probably sitting still at around 90% implied volatility. What it means is with a 68% probability, the implied price range is $7 USD and $137 USD. In its simplest form, what that's telling you is there's a high probability that this stock is going to move 90% either way over the next year. And that's what the smartest people that operate and speculate in markets pricing it at, or that's what the collective market is currently pricing the option at. So this isn't necessarily about using options to speculate. This is about understanding what the options market is pricing to insure an asset. This gives us a really good sense that the market thinks that this thing is going to move a lot. Moving on to some fundamentals then. When you look at all of these winners, and this is already a huge winner, with a market that I don't think we fully understand how large it can get, trading at a 62 to a 68 times sales. And a lot of the market is looking at their revenue growth here year over year and saying that these guys are going to continue to grow at 30% plus for the foreseeable future. The market is nascent, just so much opportunity that these revenues will just continue on into the future. Let's assume that they do actually continue. The revenues move, but the market cap doesn't move. What you're looking at is about $3 billion with this 38% growth rate assumption by 2030. The market cap on Rocket Lab, $40 billion, 13 times in 5 years if the market cap stays the same. What's our thesis and what is our long-term view on this holding? Has concentration become an issue with any position in particular? This is a really interesting case study of where there's been large gains. What's the fifth obligation, and have I calculated that if that applies to me? And have I prepared myself for large price movements, right? Because ultimately the position value will change dramatically depending on the volatility, which we have observed. The Wall Street is pricing at a 90% implied volatility. Let's move on to Rocket Lab. There's a few interesting ways to consider Rocket Lab, right? Is Rocket Lab a national treasure like Novo Nordisk, which actually ended up creating a large GDP contribution, so much so that they actually had to exclude it from some of their public data as to not skew what was really going on in Denmark? That became such a large portion of their GDP that they had to make changes at a national level. So there are some similarities with the Novo Nordisk story and Rocket Lab. Then I've also got some other kind of aerospace companies that are relatively speculative. And then I've also got us some standard cult stocks. So we've got Palantir, we've got Tesla. And what we can do is, one, we can look at the price chart over the last 5 years. We see that, Rocket Lab is the top performer. Now, interestingly, you would observe that SATS, S-A-T-S, has seen a strong return. And you've also seen that Palantir is only slightly behind Rocket Lab, extremely correlated until recently with Rocket Lab too. And then everything else is kind of lagging. You notice Fly down 56%, which really demonstrates the winners and losers in these speculative spaces. And then if we look at some actual different fundamentals, what I like to look at here with some of these more speculative growth companies is price to sales. The sales growth being, 30% plus is really important. If we look at the price of sales, you see here that actually Palantir is still running at a much higher price to sales than Rocket Lab. However, Rocket Lab and then everyone else, there's quite a big difference. Tesla's trading at a 15. They're much further along the whole scale scenario than Rocket Lab. If you look at their kind of net revenue, there's not really a comparison. This continues to be a growth story with which is founder-led, which is a similarity to Palantir and Tesla, and then has the excitement of very devoted investors. Because Novo Nordisk got really big when the GLP-1, so all the weight loss drugs, became very popular, and it went on a crazy run. We're looking at over the last years, their highest cumulative return was kind of 300 odd percent. From a scale perspective, if you look at their revenue, the market cap's much larger. The revenue is much, much, much larger, although declining. So that growth story is gone. So that's, I think, the interesting piece here is once the actual growth story was no longer there, their stock price has obviously subsequently really suffered. Rocket Lab's on a tear. Look at it go. It's crazy. It's up 464% over the last 5 years. Look, I thought this was a really interesting episode. I think the fact that there's such a fifth burden on the investor base, us locally, we have to pay fifth on our unrealized gains every single year. I hope you enjoyed this first Eccuity Insights episode, and we look to catch you again in another episode. Goodbye.